This is our weekly market update where we start in the US, across to Europe and Asia, and then in Australia, covering commodities and crypto along the way. A 7-day global stock market rally slowed down in Asia on Friday as uncertainty over the Federal Reserve's plans for interest rate cuts made investors more cautious, though equities have recovered from a plunge after Trump's April 2nd Liberation Day tariff announcement that set off fears of a recession. The MSCI All Country World Index dropped 0.2% as Asian stocks ended their longest winning streak since January. Hong Kong shares fell 1.1%, and Japan's Topix slipped 0.8% after hitting a record high on Thursday. The ASX 200 in Australia fell 0.5%, with 7 out of the 11 sectors in the red. But the benchmark S&P 500 kept tallying all-time highs during the week. The S&P 500 has surged 28% since its low for the year a week later, while the tech-heavy Nasdaq composite jumped 38% in that time. Market volatility measures have eased considerably, though. The volatility index was 60 back in April, but is now below its long-term median at 17.6 for most of July, and on Wednesday it posted its lowest close in 5 months. The record-setting rally has lifted valuations to historically expensive levels. The S&P 500 was trading at 22.6 times earnings estimates. That's well above its long-term average PE of 15.8, even as the S&P 500 market breadth is narrow, as a small number of high-tech stocks are responsible for the bulk of the uplift, which could make the market vulnerable to disappointments in the coming weeks. Apollo Global Chief Economist Torsten Slok said investors should be wary of how increasingly concentrated the market is becoming. If you had invested $1 million in the S&P 500 on January the 1st, 2021, your return today would be $660,000, of which more than half would have been coming from the top 10 biggest companies in the index. Under the hood, world debt has risen to a record high, above $300 trillion. The US money supply M2 reached a record $22 trillion in June, and global liquidity reached a record $113 trillion, tracking the S&P 500 actually, while CNN's Fear and Greed Index ended the week at 74, just shy of extreme greed territory. 4 of the measure's 7 indicators, stock price strength, stock price breadth, safe haven demand, and junk bond demand, were in extreme greed territory, signaling risks ahead too.